healthcare reform consideration for seniors?
Well, I would say you would plan for healthcare reform for seniors the same way you plan for how you deal with Social Security as seniors. Yes, you're going to still have a Social Security, for example. It just matters a lot less. It only covers a much smaller percentage of retirement than it did for the generation before. Probably, we don't know yet with healthcare reform, but given looking at the overall costs of it, and you'd have to anticipate something similar going on, and you'd certainly want to plan for that, that your costs are going to be much higher than your parents' costs, even in Medicare.
Okay, let's go to the most heavily traded commodity in the world, which is oil. And in asking a financial advisor about oil, I mean, you know, come on, it would seem that there would be, that the prices of gasoline would be going out the roof because, you know, every time I turn around, there's more and more oil being pumped into the Gulf. But the fact of the matter is that there's less pain at the pump.
Yeah, I think the oil spill is an example of what the actual oil supply and demand of oil should be or is. Eric and I have never bought off on the fact that the oil should be as high as it was when it was over $100 a barrel. There was a lot of forecasts for shortages and exceeding demand exceeding supply in countries like India and China, but that's still way out there in the future. So some of these commodity traders and these future forecasts for prices were unrealistic. It all goes back to historically, you know, it's a kind of economics 101 concept. What is the relationship between supply and demand and the price that correlates to that?
So while we talk about savings and all kinds of things that where we can have less dependence on oil, the truth of the matter is that the public is in the, or at least the American consumer is demanding less of it.
Yes.
And that's
Correct.
working. And even though there's this huge amount of oil that is being thrust into the Gulf right now, as we speak, there's less of a demand.
Well, there's less of a demand or growth in demand in the United States and Europe. There is higher demand in Russia, China, India. So you have both things taking place, but the price of oil, as it has been really for at least the last 2 or 3 years, is not necessarily 100% on fundamentals of supply and demand. There are some other factors that are taking place here. One, it's being used by traders as sort of a proxy for the economy. You'll notice when people are really worried about Europe, price of oil goes down. When people are less worried about Europe, price of oil goes up. Before, it was the United States economy where oil was
Well, we're going to
back
get
and
to
forth.
Europe, and I think people are
Yes.
plenty worried about Europe right
Oh,
now.
yeah. And then the price of oil fell.
So should I go buy BP stock because it's tanking?
Probably not now.
Probably not now. Oh, it's lower to go, huh?
Yeah.
It may go from tanking to in the toilet. Is that what you're saying?
No one knows, but definitely there's room for more downside.
Well, the interesting thing about BP stock, too, is this was a safe stock that was purchased for people because it had a good dividend. And now it's anything but. Now it's a very risky play.
All right, so let me ask this then. Because oil is such a heavily traded commodity and lots of people look to oil stocks because they are safe, do people still look at oil stocks as they are safe, whether they're BP or not?
I think what the BP experience is going to show is that just like any other asset, any other investment, you need to be a little cautious and not too overly optimistic about the safety.
Okay, so if oil was a reason for war in Iraq, I've always wondered what the reason for war was in Afghanistan. Well, maybe have we found it? So I'm going to ask my financial advisors, if I were to ask one, I'm going to ask them about Afghanistan because of this right here. It's an Associated Press report out today, as a matter of fact. Afghan mineral wealth may be greater than $3 trillion. Craig Andrews, a leading mining specialist for the World Bank, said that they were expecting to produce copper within 2 to 3 years and production of more than 2 billion tons of iron at another in a central province, and a relatively safe area of the country could possibly begin in 5 to 7 years and possibly sooner. So have we finally found a reason to be in Afghanistan?
Well, I think it's not just have we, it's more of a global question because one of the largest copper deposits ever happens to be one they discovered in Afghanistan. And China is probably one of the largest consumers, at least growing consumers of copper, and also one of the largest investors right now in copper mining and exploration in Afghanistan. So it's definitely
so wait a minute here.
global
So
interest.
we spend billions of dollars to help the Afghans against the Russians and well, against the Soviets at that time in a war, and then now we're spending billions of dollars in a war in Afghanistan, and China is coming in and reaping the profits?
It's hard to say politically and strategically.
Well, I'm saying I'm dollars and cents.
Yeah, dollars and cents, but that's not the way the world turns. There's
well, how does the world
political
turn
interests as well as economic interests at play, and it's a kind of a fine
so
balance.
what are we paying China back for something, and we're letting them come in, and while we're sending our people over there to die in wars?
That probably not. No, I think that's strictly free market economy, and they got there first.
Yeah, the Chinese actually didn't have, it wasn't an automatic, given some of these contracts that were awarded. It was a state-owned, I believe it was a state-owned
Yes.
Chinese company that outbid other countries.
Yeah, but wait a minute. We got people over there with guns being shot at, being killed. Do the Chinese, I mean, do they have their military over there helping us?
No.
Okay. That's a problem. I take it that we don't go in and invest right now. You wouldn't necessarily say go in and invest in Afghan minerals, huh?
Not too much risk.
They have a long ways to go to get those minerals to the market.
It's probably easier to get poppy to the market out of Afghanistan, right?
Correct.
Actually, is there a drug-based economy that we know about?
The current situation I'm not as familiar with, but my past former professional career with the agency, CIA, there was some information that suggested that there was a large percentage of the economy that was directly or indirectly dependent on the drug trade.
And we knew about that?
Sure.
Sure. Okay. How do I invest in that? Because it seems like they don't have a whole lot of overhead.
It's just something that you're not going to directly invest in. It's just that it's part of the culture, part of the country's economy, and the government's efforts to regulate drug trade is pretty well explains the...
Explains the reason why I can't invest in it. Okay, got it. All right, now, we talked a little bit about Europe. Europe is seemingly a bit of a mess. You know, you've got Greece, you know, down about as low as it can go. Spain, Portugal, been rumors. France, hard to tell. The UK is kind of separate and kind of not. Germany's not happy that they're paying for Greece. Is that the way it is in Europe right now? Is Europe about to, you know, just kind of go belly up?
I don't think you'll have an imploding situation in Europe. It's not good, and it's not a surprise either, because there's no reason to believe that with similar financial and economic policies in Europe as in the U.S. that you wouldn't have similar problems. So these problems were forecasted, and it was just a lagging situation behind the U.S. But you also can't say that there's going to be a disaster in Europe either, because some of the problems that you have in Spain and Greece, it's like equating individual states or counties, like California has a problem right now. That doesn't mean the U.S. economy is necessarily going to follow California.
There is one difference, though. In Europe, for example, they have a monetary policy that's created really by Germany, is really pushing that boat, and they have been for a long time. They control and always have the European Bank, central bank. But the difference is each country can control their fiscal policy. Greece can control theirs. They can cut their budget or raise it however they want, same as Spain and Portugal. But they can't control their monetary policy. So they don't have the weapon that we do, say in the United States or UK, for example. British do control their own monetary policy, so they're a little separate in that respect.
So in creating a common currency, but not creating a common government, they've really made a problem for themselves.
That's correct, because Germany's interests and France's, to a lesser extent, are very different than the interests of Spain, Portugal, Greece. Therefore, for Germany, they're going to run their monetary policy in a different way. Greece, historically, this isn't anything new. Their government's used to spending a lot. They just either deflate or inflate their way out of it. That's what we're doing too, by the way. In the United States, we've done this too many times. But they do it on a regular basis. They can't do that anymore. They joined the EU, so it's inherently unstable in terms of the currency until they can make some changes.
We got to take a real short break. It seems